The gold price in top consumer China leapt on Tuesday relative to global bullion quotes, hitting the highest premium in Shanghai over London prices in almost 12 months, as Beijing vowed to fight to the end against US President Trump's trade tariffs and also announced that its sovereign wealth fund is actively buying shares to backstop the value of Chinese corporations. With London bullion creeping $10 per troy ounce back above $3,000 gold, the Shanghai and Shenzhen stock market rallied 1.7%, and Hong Kong bounced 1.5% from yesterday's 13% plunge. Tokyo and Europe recovered faster, however, adding 6.3% and 3.5% respectively, while New York's S&P 500 opened with a 3.7% rebound, cutting its one-week loss to 5.9%. Trump yesterday threatened to double U.S. tariffs on Chinese goods after Beijing said it will match the rates for reciprocal U.S. trade tariffs announced last Wednesday. "That is a mistake on top of a mistake," said a Politburo spokesman. "China will never accept this. China will fight to the end." Gold kilobars traded on the Shanghai Gold Exchange today rose to 718 yuan per gram, rallying 0.3% from Monday's near two-week low, still 3.5% below Thursday's record high. That was equivalent to a dollar price of $3,047 per troy ounce, doubling the Shanghai premium over London Bullion Market quotes from $20 per ounce to more than $40. Coming even as the yuan dropped to a 19-month low on the FX market, that likely reflects strong and rising demand. Today's Shanghai premium, the largest since last April's China gold frenzy, and effectively the gross incentive for banks to buy London gold and fly it to China, was more than 5 times the past decade's typical level and 10 times the prior 2025 year-to-date average. "The Chinese economy is an ocean, not a small pond," said China's President and Communist Party General Secretary Xi Jinping. The world's second-largest economy, in spring, is full of vitality in its mobility and busyness, bringing together a vibrant economic picture, says the China Daily, reporting a boom in tourism and retail spending during last weekend's Qingming Festival. Alongside reports of strong retail investment and jewelry demand, gold ETF investment through trust funds primarily listed in China or Hong Kong expanded in March for the 9th time in 12 months, new data said Wednesday from the Mining Industry's World Gold Council. More than doubling in size since last March to need 138 tons of bullion backing, those Chinese ETFs still account for less than 4.5% of the sector's global total. Gold-backed ETFs worldwide enjoyed their 3rd consecutive quarter of net inflows between January and March, expanding by 7.0% to need an additional 226 tons of bullion. That was the strongest growth by weight in gold ETFs since Russia's all-out invasion of Ukraine began in Q1 2022. Buying gold for its official reserves yet again in March, the People's Bank of China today said it firmly supports the moves by Central Huijin Investment Limited, an arm of China's sovereign wealth fund, to support China's stock market by buying A-share index funds during Monday's dramatic plunge, and will lend to the fund when necessary to resolutely maintain the steady operation of the capital market. While Shanghai's CSI 300 stock index has lost 5.0% so far this year in US dollar terms, New York's S&P 500 has dropped 13.7%. Western Europe's top corporations have meantime added 1.7% since the start of 2025, when the Euro Stoxx 600 index is adjusted into US dollar terms. Please like this video and subscribe to our channel.